For some, investing in real estate might bring up the image of managing properties, dealing with tenants, having DIY repairs constantly come up. But what if I told you there's a way to actually own real estate without the hassle of owning it all by yourself? I'd like to tell you about a strategy called real estate syndications. Real estate syndication? What is that? Hey taxpayers, it's Tiffany Gonzalez CPA here, and I only bring you key financial term and topics you may have heard, but I make them super easy to understand. Real estate syndications are a way for multiple investors to pool their money, to pool their resources, and purchase a significant piece of real estate. And when I say a significant real estate purchase, I might say something like a really large project. Think a multi-level building, apartment complex, or large community development where any individual investor on their own might not be able to afford. Because there are multiple people involved and this is a group investment, you are sharing both the risk and the reward. A syndicator, sometimes also known as a sponsor or the lead investor, identifies a key opportunity. This might be a large building, a community project, something where they can invest money into a real estate project. Once the syndicator has identified the deal, they create a limited liability company and they start to recruit other investors to invest in this LLC. Now, let's talk about the role of these owners in the syndication. First, you have limited partners. Limited partners are essentially giving money in exchange for ownership interests of the LLC or property, and they're going to be entitled to both the tax benefits of a loss, but also to the benefits of a profit. Sometimes these deals are structured in a way where there's guaranteed distributions for these limited partners. And then you have the general partners. These are the partners who are going to be actively involved in the deal. They're going to be the ones closing on the property, managing the property, or hiring a management company. They're going to be engaging with the professionals, both legal and accounting, in order to ensure that everything is running smoothly within the business. So why would someone choose to invest in a syndication instead of just buying real estate on their own? There are several reasons. I mean, an investor might want to choose to own real estate without having to constantly manage it on their own. Second, the real estate syndication allows for you to invest in a much larger opportunity, something you might not be able to individually invest on your own based on your resources. And third, the real estate syndication allows you to effectively leverage other people's expertise and knowledge. Essentially, the LLC that you're investing to has a lead investor, a sponsor, a syndicator who has done this before and has navigated the complexities of the market. Now, before jumping into any real estate syndication, as exciting as it sounds, it's important to do your due diligence. So what does that look like? The first is the sponsor's track record. What experience do they have? What history do they have? What past performances can they show that would indicate that they are sufficiently capable of handling this new syndication? Second, what is the investment opportunity? What exactly is the syndication investing in? Is it a complex apartment? Where is it located? What does the deal look like? How much do you need to contribute in exchange for what percentage? Are you guaranteed distributions? There are so many questions in the investment opportunity area that you need to be thinking about. Third are the fees, because nothing in life is free. You need to understand what kind of fees are going to be involved in this investment. The syndicator isn't working for free. So there's going to be things like property management fees, acquisition fees, asset management fees. There might also be performance fees, as in when the property or the business does well, the syndicator receives additional funds for the performance. 4, who are the professionals that the syndicator has on board to help manage the project? Number 1, is there going to be a management company? Number 2, do they have an accountant or a legal attorney on board? And if so, what are the credentials of those people that are involved? And the last thing you want to consider is seeking professional advice. After you've ironed out your questions in all of these different key areas, you want to consult with a financial advisor, your attorney, and/or your accountant, all three, in order to ensure that this is the right investment for you. In summary, real estate syndications are such a lucrative opportunity for investors to really pool their funds, leverage expertise, and really get involved with a large real estate project where, while there can be a high reward, there are significant risks. We hope you enjoyed this latest installment of What Is That? Hit the like button, subscribe to our YouTube channel, and follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.